It's time we all come to the realization that governments don't care about you and banks don't care about you. I'm a big believer that real freedom is financial freedom. What we're going to discuss today is something we go over 3 days a week, Monday, Wednesday, Friday. I call it the dollar is dead because I'm pointing out that dollars go down in value and assets go up in value. But let's first take a bigger step back and think the U.S. government hit $35 trillion in debt. And you're probably thinking to yourself, here we go again. I'm hearing about the debt. I don't care. There's nothing I can do about it. True. Nothing you can do about the government debt. The best we can do as individuals is vote and hope that the person we voted for gets in, assuming that they're going to help the U.S. with their debt situation and the economics and GDP and unemployment and inflation. All these things you can't do anything about, so just forget about it and don't worry about it. No. There is something you can do. What you can do is you can deal with the effects. Let me give you an example. If you know that a flood is coming because you're watching the Weather Channel and a flood's coming for your area, chances are you or others might take some precautions. Fill some sandbags, put them around your house, whatever it may be, to try to mitigate the damage that's going to come from that flood. You know the flood's coming. Let's do something to protect ourselves and our belongings. Maybe you even leave, but you leave your house as best protected as possible. Hurricane's coming. You know it's coming. Tornadoes are coming. You see it on the news. They're coming. What do? Well, you might leave, or you might go to the basement, or you might go to a safe room, whatever it may be. So, you can't stop the flood from coming. You can't stop the hurricanes. You can't stop the tornadoes. But you see them coming, so you do something to protect yourself. So why don't you do that financially? So every Friday I go over the fact that the wealthy stay wealthy and become wealthier because they hold on to assets, not dollars. We started this back in February. I've been doing this forever. This is nothing that I came up with. People have been preaching this for as long as I've been alive and probably way before, which is essentially 1, diversify, and 2, hold assets that go up in value so they're not beaten down by inflation. Over the last 100 years, I say this every Friday, the dollar has gone down by 99%, the buying power. Yet gold has gone up, and silver's gone up, and stocks and equities have gone up, and real estate's gone up. Assets have gone up in value for the most part. So first, we want to negate the damage that inflation will do to us. Inflation will make our dollars worth less, but assets will go up in value. Second, diversification. If you're investing in things, and God forbid something bad happens financially, and you need to access some of that money, you may have an emergency savings in dollars, and you may have dollars for your day-to-day transactions for a month or 2 months. But other than that, chances are you're going to have them into investments. If all your investments are down in value at this particular point in time, you need to access them, you'll be forced to sell them when things are down. So oftentimes people will try to invest in things that tend to do, or I should say go in the opposite directions of one another. So let's say gold may be up, but some of your equities may be down. Or some of your equities may be up, and some of your gold may be down. Gold being a commodity. So every Friday we go over a basket of goods to show you, if you look at your checking account, your savings account, your CD, things that are dollar related, they're not going to beat inflation. What is inflation? It's around 3%. We'll go over that. And then, what else can you hold? Well, if you're just looking at commodities, you've got things like gold and silver. If you're looking at equities, you've got stocks, or maybe you just pick an index fund. S&P 500 has been talked about as just one of the easiest things to just set it and forget it, because over time it goes up. Over time, equities and stocks go up. Over time, gold and silver goes up. Now we have crypto. Over time, short period of time so far, crypto's been going up. Over time, the dollar's been going down. It's not going to stop going down. Governments are not going to stop spending. You're not going to stop them. I'm not going to stop them. Not only are they spending all of the tax money you've given them, but they're spending more and they're printing money, which is causing inflation. So here is this week's analysis of the basket of goods, these various things you can hold instead of dollars. I always preach have an emergency fund. I did a video this Wednesday talking about emergency funds, specifically because unemployment keeps going up. More people are getting laid off. So you need to have or I would recommend you have your emergency fund. I always need to say this isn't investment advice. I'm not an investment advisor. I call myself a big dumb animal. Actually, many people call me that. But when you've got people being laid off, it would behoove you to make sure that you have an emergency fund and that you know how to make it last as long as possible. Go back, watch Wednesdays. I've got many videos to help you do that. So today, let's go over if you want to start spreading out your investments and diversify and look at things to hold instead of just growing your savings account with more and more and more dollars. Believe it or not, I did a video. It's not out yet. We have calculators to help you with various things like getting out of debt, implementing different methods, you name it. But I did an investment one. And on the investment calculator, you can go to the site. It's there. The video will come out shortly. You can put in how much you're being taxed and also the inflation rate. So in other words, you say, I'm going to put this much money away every month for this period of time, and I'm going to earn this much interest. And there are scenarios where because of inflation, after 5 or 10 years, yeah, you have more money in the bank, but it's actually less than you put in terms of buying power. What does that mean? It means that eggs were $1 2 years ago, and now they're $4. Gas was $1 5 years ago, and now it's $3, whatever the case may be. So if things keep going up in value faster than the amount of return you're getting on your dollars, then you're wasting 5 to 10 years. It's unbelievable. Let's get into the numbers this week, compare them to last February, and see if these various things, equities, commodities, crypto, etc., have beaten the value of investing just in dollars.
Here is our comparison back to February, roughly speaking, the beginning of 2024 till now, looking at all the various ways in which you can hold your dollars. Starting at the top here, once a month they update this website, and we're looking at the savings rate hasn't changed much, 0.45, a 3-month CD, 1.5, let's say, a 3-month Treasury, roughly 5.5, hasn't changed much. If you look at the very bottom, you'll see inflation is 2.9 for the last month of July. So look at the savings rates of $1. You're not beating inflation unless you have that Treasury. However, remember that on anything that you generate income from, these things are going to be taxed. So you're going to lose the tax rate as well. So by the time you take out your taxes, you're making and not keeping up with inflation. Great to have dollars for emergency fund, great to have them for a rainy day. But let's move on. Here are other things you can do if you were to diversify. Gold, $2,000 back in February, now it's around $2,500, $2,497. Silver was at $22, $23 beginning of the year, now it's at $28.5. Now you might think that's not a big deal. Well, it is. If you look at 23 versus 28, it's a $5 difference. $5 on 23, that's about 20% gain. That's a huge difference. Look at gold. 2,500 on 2,000, it's $500 difference. On 2,000, that's a 25% gain. So those two assets went up 20, 25% respectively, whereas your dollar did not even keep up with inflation. It went up only 1% if you have it in a 3-month CD. Bitcoin, Ethereum, Bitcoin considered the world's gold or digital gold, Ethereum the world's computer. You may or may not be into crypto. I happen to be. I've got a channel all about it. Earlier this year, 43,000, now around 58,000. Very volatile assets. Ethereum, 2,200 beginning of the year, 2,600. There's many other what they call altcoins like Ethereum. Both of those assets up substantially. Just look at the Dow Jones in general. The DJIA is 30 stocks. 38,006 at the beginning of the year. It's been whipsawing lately. It's still at 40,000, over 40,000, which is up 2,800 for the year. The S&P 500, which is a favorite among many people because you can just get an index fund, and over time it does very well. It's been shown to be one of the best over time investments that you can just kind of set it and forget it. 49.58 beginning of the year, 55.34. All right, now if we look down here, of course, we just talked about inflation being almost 3%, which means your dollars are constantly being worth less. Unemployment is up, not a good sign for the economy. The reason I have these things here at the bottom is to show you where unemployment is. It's been going up. 4.3, it was 3.9. 2-year Treasury and 10-year Treasury. That's if you were to buy a Treasury note, which comes from the government. What are they going to pay you? They're going to pay you a little over 4% for the 2-year and 3.9 for the 10-year. Those two things are what's called inverted. See the inversion there? And if you look at this chart, when it's below zero, meaning the 2-year and the 10-year are inverted. In other words, they're going to pay you a higher interest for a 2-year than they're going to pay you for a 10-year. That's not typical. Usually you get higher interest for the longer term. That usually means we are in or going into a recession. It's been negative for quite a while. I always point that out because I always stress, have an emergency fund, make sure you've got money available, make sure you know you're budgeting. I did a show on Wednesday specifically about that. I'll link to it as well, so that you can make sure that if something happens, you're able to adjust. So some of your money may be in dollars. Other, of course, if you hold it in commodities, stocks, crypto, whatever it may be, you diversify. Therefore, over time, you can beat inflation and you can play the same game the rich people are playing, which is buy and hold assets because over time they go up in value. Hope this was helpful. We do this every Friday just to open your eyes that the dollars always lose value. If you want to stay ahead, typically it means you've got to have a diversified portfolio of assets. Have a great weekend.